Hi everyone, this is a short screencast for Independent Colleges Dublin for F6 taxation for December 2014. And in this particular screencast, I'm going to be looking at question 5, the VAT question for your exam next week, and what I think are very possible sort of items that we included on that exam and what you might have to face. And as with the other videos that I've uploaded, you'll see that we've got a sort of couple of core areas here and then just the detail down below. Okay, so if I cover the core areas first, I think that with VAT, the most likely sort of main element to a question 5 on VAT has got to be some sort of calculation. And more often than not in the past, that's been as simple as dealing with a number of items and trying to establish what the VAT payment due by the end of the bi-monthly period is. Okay, so that's what I would probably expect to see in the requirement, although obviously anything is possible. But that, that area gives the examiner quite a few other sort of sub areas to examine and to test whether or not you're sort of au fait with the key VAT rules. So in essence, really what we're saying is that for a particular VAT registered trader, a certain amount of VAT will be payable, and that will be made up most likely of a sales VAT in some way, and obviously a series of items of purchase VAT or indeed input VAT. So really in terms of the detail, I would expect a sort of a list type format, a little bit of information on the trader, and then a variety of different items, perhaps 5, 6 or indeed maybe more. And obviously the approach to that is really to deal with each item one by one. Okay, so more of that in a moment. The other side of it, and there's always some sort of add-on to the VAT question. It's not just simply going to be calculate VAT payable or indeed repayable. There's got to be something else, and I've picked out a few areas here. This list is not exhaustive in any way, shape, or form, but it's a couple of areas where I think that there's a little bit of room for manoeuvre, perhaps some room for catching some students out. Now, the first one is a simple admin issue in terms of payment dates. I would hope that that sort of thing is not going to catch students out. In other words, the payment date for the VAT amount, and we'll see more detail of that below. We know that that's possible by paper or through the ROS system. Next point is just sort of cash accounting and annual accounting, a couple of schemes that can help the taxpayer subject to certain conditions. Okay. Next possible point maybe is perhaps something on the foreign side, foreign aspects of VAT. Now, there's a fairly large amount of information in your study text on that area. I picked out one which does tend to, confuse students because of the fact that it's double-sided. In other words, it impacts upon the sales side and also impacts upon the purchase side, and perhaps also because the net effect is neutral or zero. So more of that in a moment. The 2/3 rule, again, this impacts to a large extent on what VAT is due, because in essence what we're talking about is sales VAT and what should be charged on an invoice. Next item here, you'll see a long list in your textbook of what should be included in a valid VAT invoice. So if you're raising a VAT invoice and you're sending it out, what do the revenue require you to include in that? We're talking about things like obviously your address, the customer's address, a VAT exclusive amount, etc., etc. Next point is just this sort of, again, another listing similar to the one above here about no taxable supply. In other words, in what situations is a trader who is VAT registered allowed to make a supply, in other words, to make a sale, as it were, I guess, but not have to charge VAT if the trader is VAT registered. And there are sort of 3 or 4 areas there which I'll touch on below. So, this admin side, I wouldn't expect it to be worth, out of, let's say, 10 marks, more than possibly 2 or maybe 3 or thereabout. But those are 2 or 3 marks that should be easy to get if we just have a modicum of knowledge. Okay, so let's go down to the detail of the first part here and sort of this issue of computing VAT payable at the end of a 2-month period, or indeed repayable, perhaps. That's always possible. So I'll split it into two parts, really: the sales or the output VAT, in other words, the VAT that's being charged out to customers. I mean, what sort of things can he play with in that area? And I think the first and the most obvious one is just this idea of certain sales not being subject to VAT, in other words, them being exempt. Okay, do bear in mind that we have a couple of possibilities in terms of standard rated VAT, but also bear in mind that a trader can be VAT registered but be making a zero rated supply. In other words, they are charging VAT, but they're charging it at the zero rate. So I would just watch out for the necessity to perhaps split sales down into various parts, and you'll see below that this issue of partial exemption, as it were, in other words, where a trader makes multiple forms of supply or multiple types of sales, some of them are standard rated, some of them are zero rated, and maybe some of them are exempt, can impact upon the recoverability of input VAT. So let's say a simple example, we have a 50-50 split, let's say, between standard and exempt supplies, and we have some input VAT that needs to be split up. We would have a 50-50 split, let's say, if we're working on the basis of using turnover as the split. So I think certainly being careful about obviously VAT inclusive and VAT exclusive figures when we're talking about different types of supply is important. And indeed, on that note, this issue of imputing VAT, I guess it's not a word that you will see in your text, but it's certainly a word that I use within my classes. And what we simply mean by that, where we have to impute VAT, and I think it's highly likely that you will have to impute VAT within the exam, either for sales or indeed for purchases. What we simply mean by that is that you're given a gross figure that includes VAT. Let's just say that it's sales for the moment and they've been charged out at 23%. What you're required to do is to calculate the VAT that's been included. So, let's say we're talking about that figure of 1,000. How do we do it? Well, we simply multiply by 23 over 123 to get the VAT element. And that's what imputing VAT means. We're imputing the VAT included within a gross figure. Okay, contrast that with the situation where you're given a net figure and you're just asked to apply, let's say, a 23% rate, then we simply multiply 23% by the net figure. Okay, so be clear on how to extract VAT or indeed calculate VAT in relation to sales. There's only a couple of ways that he can do it, but just be careful on that. The next thing I've sort of allowed for within this area of sales or output VAT is the reverse charge. In other words, this foreign sort of impact upon the VAT return, where we're required with a EU import, in other words, where we're, let's say, an Irish VAT registered business and we're importing from within the EU, as long as we supply the supplier with our VAT number, we can get away with a zero rate charge, but we have to make a reverse charge. In other words, we have to include within sales and within purchases, an amount of standard rated VAT, which in effect is equal and opposite. So that can impact upon the sales side. It won't impact, obviously, upon the amount due, because it's in both sides. It's in the sales and the purchase side, but it would need to be included, obviously, within our top half of our little working, as it were. Okay. Next point I've chosen on sales VAT is something that I've seen before within the F6 exam. And in other words, it's this impact of dealing with cash accounting rather than the invoice basis for VAT sales purposes. And, we need to be clear, again, as I've mentioned below in the admin or other areas section, we need to be clear what cash accounting means. It means that in the 2-month period that we're concerned with, we're only interested in sales receipts in respect of our VAT return. So really, we're trying to see how much have we received rather than invoiced. And it's that VAT that's inclusive within our receipts that we're going to account for the 2-month period. Okay, so those are sort of 4 areas. Those are the types of areas that I would expect him to come at you on. So do get a fix on those. Okay. Next side is really the purchase side. And do bear in mind the way that I've laid this out here, I would expect you to be laying out your answer in the same way. In other words, we're going to have a figure in some way for sales VAT for the 2-month period, and then listed below that, we're going to be taking off obviously input VAT or purchase VAT that we're allowed to claim back, and the difference between the two figures is what we're going to account or indeed pay over to the revenue on the 19th or 23rd day following the bi-monthly period. Okay, so first issue here just relates to what I've said above about different types of supply or different types of sales. Let's say standard versus exempt. And the thing that you'll see within the exam sometimes is what I would refer to as unattributable VAT. In other words, unattributable VAT that's been incurred on purchases. So we need to claim it back. But if part of it relates to what we would call an exempt supply, what we know is that we cannot claim input VAT back in relation to exempt supplies. Now, in terms of the split of the turnover, remember we're talking up here about, let's say, standard versus exempt. So the way that I've seen it done within the F6 exam previously is turnover, but it doesn't have to be done like that. There's several other bases in which it could be done. We touched on those in class, perhaps square footage or number of employees, anything that is seen to be reasonable, and that would have to be agreed, obviously, with the revenue. So, let's say that it was 50-50, then the input VAT that's relevant would be 50% claimable. So I'll include that in my list of what I deduct from sales VAT, and 50% non-claimable. So that really goes to the P&L account, as it were. Okay, so that's the first one. The second one is our old diesel versus petrol trick. We know that diesel is okay. In other words, the VAT in diesel is okay, but not in petrol. Don't fall for that trick. There's some easy marks for not very much at all. And, I would say, the list that I have, diesel versus petrol, and obviously this one here, private usage, I'd be surprised if this type of question does come up if one or both of these weren't in it. Okay. Now, the private use, can be used on its own, or it could be perhaps combined with something like diesel and petrol. And we've seen that done before in the F6 exam. So, if it was combined, then what we're looking for is, okay, we're only interested in the diesel amount. If the amount that's relevant to business use is 80%, then we're going to claim back 80%, okay? And obviously the balance, the 20%, is irrelevant for us, okay? The other way that it could be used, and this is probably as common, if not more common, is just very simply that you're told that an asset is 100% non-business or used 100% privately. And, a typical one might be a computer. And in that case, it's completely irrelevant. In other words, we cannot claim any input VAT at all. So I would put that in. Make sure you do put it in. Computer, 0. Yeah. 100% private use or whatever. Make sure you do put it in, because obviously if you don't, you can't guarantee that you're going to get the marks. The marker could just think that you'd forgot it or that you didn't want to make a decision on it. Okay. Next point here, something that's a little bit funny. Just I'll refer you to sort of page 242 of the study text, the BPP study text on that. And really what we're talking about is the purchase of a car. In normal circumstances, it wouldn't be okay, subject to certain conditions, 60% use, etc., and a provision for use for or business usage for 2 years. So I'll refer you to page 242 just to have a quick look at the example on that. So, if we were to see a car in there, then I would have thought it's more than likely that 20% conditions is met. Yeah, don't quote me, but I'm saying it's more than likely. I think it would be unusual to put in this issue of the car because it's a little bit complicated. There's a percentage. It's 60% business usage for 2 years, and then there's 20% of that. Or 20% of the VAT that's okay. So a little bit of an unpleasant item to put in. So I would have thought maybe I'd err on the side that the conditions are satisfied and 20% of the VAT is okay. Next one is just the reverse charge. Again, we're talking about EU imports here. I've mentioned that above. This is just an equal and sort of a corresponding entry, as it were, with the sales item above. Okay, so do have a look at that in your text. Not too difficult to deal with. We're just talking about the same amount going in both sides, and therefore in fact VAT neutral. Last point here, which is just cut off the bottom of the page, is entertaining. Okay, and that can be come at, or they can come at that in a very straightforward fashion. I mean, normally when you see that word entertaining in tax, it's normally a sort of an unpleasant word, in the sense that there's a problem. It's not allowable. I think what they tend to do, and what tends to, or what may catch sort of students out, is that they'll often put some reference into employees, and we know that obviously for other purposes where we have things like a staff party, for sort of CT purposes, for example, we know that it is allowable. So I think that the reason that they're doing that is just trying to confuse the student. So for VAT purposes, let's be clear here. Any form of entertaining, really, 99 times out of 100 is irrelevant. There is a small get out for accommodation. I can't see them using that, but let's exclude the VAT. Let's put the item in entertaining and a zero reclaim, unless that refers to that main exception, which is at conferences and accommodation. Okay, that really sort of concludes that element, that side of it, in terms of the sales VAT versus purchase VAT. Those sorts of tricks recur again and again, and albeit for the fact that this question, the VAT question, should be around about 10 marks, there's some easy marks to be had there. If in doubt, make a decision. Certainly don't waste time. We should be scoring a minimum of half on a VAT question, because I don't think it's one of the more complicated areas of the F6 examination, or at least it certainly hasn't been in the past. Okay, this second area here is just this idea of administration, or possibly other, so other items that could be added on. Now, as I said, I don't expect this area to be worth lots and lots of marks, but there is the potential for some easy marks here. The first one I've chosen is just your straightforward payment date, and we should certainly know that. We shouldn't be making mistakes on that, and let's just remember that it's the 19th day following, well, on paper, or 23rd on the ROS system. Okay, next one, quite possible here, cash accounting and the annual accounting scheme. We need to know what they are. We need to know that the cash accounting scheme deals with cash. One little quirk on that that I've seen, a little trick I've seen played in relation to F6, and just this idea that we are dealing with cash, but we're dealing with cash from the sales side. In other words, if you receive the sales receipt, as it were, in the 2 months concerned, then that VAT crystallizes and is due on the 19th day following. Now, on the purchase side, there's no change at all, because the purchase side can be done always on an invoice basis. So it doesn't matter whether or not you've paid the invoice or not. It's not going to affect the purchase side. Okay, so let's be clear, very much on what the cash accounting scheme means, and indeed the conditions associated with it. We know that we have two. It's either or, it doesn't have to be both. The first relates to the 90% of taxable supplies to unregistered businesses, or at least that. And the other one just is simply a taxable supplies limit of 1.25 million. Those conditions, easy to remember. Please do remember them. The annual accounting scheme, a little bit more different. We're simply talking about a way of simplifying a trader's affairs, and to have one VAT return. Payment will be due within 2 months of the end of the tax year, or the calendar year that would be agreed with the revenue, and obviously a series of direct debit payments throughout the year, sort of payments on account. Okay, so be prepared to explain those concepts. In terms of the foreign aspects, I've chosen the reverse charge, imports within the EU. There are, several other areas there. Do take a look at foreign aspects. I could see that coming up. This would be the one that, tends to confuse students. I've included within the part 1 above in terms of VAT payable or repayable. So, have a look at your foreign aspects and certainly have a look at the reverse charge. Next point here is just this issue in relation to the 2/3 rule, and indeed, repairs, where we're sort of tossing up between goods and services within the repair of a particular item, and really the essence of it is just this, this idea of, what are we going to charge? In other words, do we charge 23% or do we charge 13.5? And that obviously depends upon the value of the goods compared to the overall value. So, have a look at that in your text. Important little area, albeit quite small. Okay, a VAT invoice, this part E here, valid VAT invoice, probably 10 or 11 items listed within the text. In other words, what we're saying is, what do the revenue require us to include in an invoice for it to be valid? We obviously want, as traders, to issue proper VAT invoices, but also remember that if we're claiming VAT back, we need to have a proper VAT invoice as well. Now, I wouldn't expect the examiner to require you to list all of them, but do think, on first principles there. If that sort of thing was to come up and you perhaps haven't managed to memorize 4 or 5 different items, what would you expect on a VAT invoice? I'd certainly expect, the trader's address, the customer's address, a VAT exclusive amount, a VAT amount, etc., etc., an invoice date. So, it's not overly difficult. Just think practically and think logically. Okay. Next point here is just in relation to where no taxable supply would be made. In other words, we're saying that someone's VAT registered. In what circumstances would they not charge VAT, given that they're making a supply of an item to another entity, another person? And I'll refer you to page 241 on that. I think it's the top of the page there. One of the examples is just gifts to customers under 20k, under that 20 euro limit. You wouldn't have to apply VAT to it. There are 4, I think. So have a look at that, learn that off. So that's really a sort of a summary, a little bit shorter video than other videos. As we know, this is around about 10 marks or thereabouts. So hopefully that's been of help. Do look at these areas within your study text, and certainly if you have the time, have a look at some questions that cover these areas, particularly the VAT payable or VAT repayable issue. Okay, many thanks, and good luck with your studies.